Alrighty, folks, for the next couple of days, I will be recording the daily financial news early, but I will be posting it at 7:30 a.m. Pacific. Hopefully you can appreciate that. I will show you the amazing view we have here in a minute, but let's get into the news. Let's talk about Fed Day. Today is Fed Day. I'll let you know what I'm thinking about. We'll talk about the dot plot. What is it going to tell us? What is it not going to tell us? So first, let's talk about Jerome Powell and the press conference. What I'm going to be most interested in when I hear Jerome Powell get his questions are a couple of things. One, how long is he going to have to wait? Obviously, they're going to be saying data dependent, but we really need to know how much longer they are going to wait. Is it a month? Is it 2 months? Is it 6 months? Are they going to get him to give a timeline for how long he has to wait to see if inflation picks up because of tariffs? Next, I'm really interested to hear if Jerome Powell admits that there is pain in the job market. We have 4 weeks in a row with rising unemployment rates. We've had lots of dirty data in the jobs number. We've had plenty of layoffs announced. Again, Hasbro just today announced a 3% cut. What is going on with the job market? And then finally, what is going on with oil, war, inflation? Is there going to be talk of a strike in Iran and what it might do to oil and inflation elsewhere in the economy? We got some data from, actually, let's go to the dot plots now. Let's go to the dot plots. So again, we're going to have 18 or 19 dots basically answering 4 questions. And the first one I want to get to is how many cuts? The market is currently pricing in 2, which would be how many we had last time we had the job or the dot plot. I'm actually most interested in how many Fed presidents say 0 or 1 for 2025. If we go back 2 times, there was a single member. Then this last time, I believe there were 3 members that said 0 or 1 cut for 2025. Obviously, that has been my call all year. So we'll see if there's any Fed president that says 0. Maybe there will, maybe they won't. What are they going to be talking about on the GDP front? GDP again came in with a negative 0.2 for Q1. It's estimated to come in at near 4% in Q2. What are they calling for the rest of the year? What about inflation? When do they think inflation breaks? Do any of them see inflation coming in at 2% by the end of the year? Is it 2.4? And then finally, the job market. Has anybody said that the job market is going to be worse than 4.6%? So the dot plot, Jerome Powell tomorrow is going to be market moving. Let's get into some economic data. Builder confidence slipped. In fact, obviously we had reports from Lennar the other day that they were basically eating margin to continue selling. It will be interesting to see what other builders put out there when they go with their earnings. But builder confidence slipped to 32. It's actually the 3rd lowest reading on record. Yes, the 3rd lowest reading on record. Came in at 32. It was 34 last month. It was expected to rise, and it did not. It fell. Buyers are steering clear, and builders are slashing prices. In addition to builders, it looks like the smaller builders are taking it on the chin. Obviously, bigger builders have the balance sheet and the wherewithal to play in this market. Retail sales dug a little bit deeper into the disappointing retail sales number, and we had drops in autos, building materials, restaurants, and bars. It looks like people are really cutting back on discretionary items. Redfin put out some data about the home buyers' down payment. It looks like down payment is now $62,000. That's the median down payment. That is down 1% year on year. Interestingly enough, Redfin pegs median U.S. rent at $1,633. That too down 1%. What else do I got? Note to home buyers. If you are out there shopping and you're writing disrespectful offers, do yourself a favor. If there is a seller who is not negotiating, move on. Follow up later. Sellers in this market know they need to deal. Open Door looks like they paid a $39 million settlement for a class action lawsuit that they failed to disclose that their dynamic pricing algorithm could not adjust to the changing real estate market. Folks, you can't make this stuff up. Open door to pay a $39 million settlement. Resi Club put out some very interesting data about the housing market. In November of 2024, only 7 of 50 largest markets had declining prices. Now, 22 of the 50 markets are putting in a negative number as of right now, with Austin and Tampa putting in the largest negative numbers. The average, again, if you blend them all together, is still slightly positive. But yes, 22 out of 50. What else do we have? Got Japan exports. Looks like Japan exports to the U.S. fell 11.1%. Imports also fell down 7.7%. Just talked about Hasbro. Hasbro is cutting 3% of their total workforce. And CEO of Amazon just said that AI will shrink Amazon's workforce. On top of that, we have more data from Reuters talking about foreign central banks are shrinking U.S. exposure. Again, this is my black swan. This is something I am very concerned about. If external investors cut back on their exposure to U.S. assets, that will be a problem. It will cause a liquidity problem. It will cause pricing dynamics. It will be a problem. And then, of course, Ray Dalio is out there saying we are on the cusp of something worse than a recession. Ray Dalio, not a fan of the tariffs and how they're being communicated. And then lastly, I've seen a couple of comments here recently from folks that I will call Crash Bro disciples. I just want to talk about them. You are trying to make fun of me for saying that home prices will not fall. Again, it's my call. I'm sorry. But I want to be clear about something you guys don't seem to understand. I want to be very clear. I would love a 50% crash. If my opinion mattered, I would ask for a 50% crash. Why? Because, folks, I've been here before. I've done it before. I have raised tens of millions of dollars to buy houses for pennies on the dollar. And all the people that are throwing hate my way, most of you would be too scared to do anything. And I am here retired because I did buy at the bottom. So again, I would love a crash. You guys are making fun of me, but you don't know what you were talking about. I've just looked at 55 years, and I don't believe it's going to happen. So far, I've been right. But hey, let's give you a peek at where we are. Points to you if you know where we are.